Today I'm going to be talking about a particular crypto project that is already being used in countries which have a major problem with inflation. There's a real world use case. Let's check it out. Hi everyone, this is the DeFi enthusiast here, and welcome to my channel. Please like and subscribe to my channel and leave a comment. It always helps in it always helps me in making these videos and growing the channel. And yeah, guys, thanks for watching. So today we're going to be looking into a very unique DeFi project, and it's by Reserve, and they have they have two tokens: the ReserveRights token, which is called RSR, and then the RSV. Okay, and the RSV is a stable coin, and the RSR is not a stable coin. And let me explain. This is a very unique project, and let's have a look. The mission is we're building a universal store of value. We believe that everyone's money should be secure. Billions of people around the world don't have a safe place to store their money. Banks in some countries can't be trusted, and some governments inflate their own currency to pay off debts, hurting citizens in the process. With a few exceptions, for example, money laundering, terrorist financing, we believe, obviously, we believe anyone in the world should be able to transact with anyone else. This requires low-friction cross-border transactions, which are hard to do with our existing financial systems. The Reserve project aims to solve both of these problems with a stable, decentralized currency that can't be abused by a government because it is globally distributed outside of anyone's control, and thus nearly impossible to shut down, which is awesome. The challenge: today Reserve's users are primarily normal people and business owners in Venezuela, where there's a huge inflation problem. We help them save in dollars and transact with low friction. They can cash in and cash out with PayPal, Zelle, and Venezuelan bank transfers. So as you can see, there's a real world use case already with this particular project, and that's awesome. That's great for adoption. For example, to cash in, users initiate a transaction in our app, then are prompted to make a transfer with whatever payment method they have selected. That transfer is received by one of the traders in our network, who responds by sending the user RSV, which is a stablecoin. This can be automated or manual, depending on the payment method. Once the user has RSV, transactions between users are simple. If a user wants to cash out some funds they have received in RSV, they can use the same process in reverse and receive a transfer from one of the traders in our network. The traders sell RSV for a little more than they buy it back for, so they make their money on the difference. Nice. This itself is a fully functional product with a growing user base, but it's just the start of our product vision. We plan to extend this cash in and cash out network to span the entire globe. Pretty big undertaking, guys, but as you can see, it's already been working in particular places like Venezuela. So and I also believe in Argentina, if I'm not mistaken, as well. So that's pretty awesome. So yeah, this has a lot of potential. We also plan to go way beyond just offering users the ability to make basic transactions. Think payroll, automated cross-currency transactions, incoming and outgoing card payments, and so on. Most of what we intend to build has been built before, but there are a lot of places that are cut off from accessing these modern tools freely. It's hard to explain if you don't already understand what we mean when we say cut off, because it's for a tangled mess of reasons. But to boil it down, some countries limit their own citizens from accessing foreign currencies. That is true. Trust me. And some countries are seen as too high risk by global financial institutions, so their citizens are either not allowed to have accounts, or they are, but accounts are highly limited and frozen so often that it's hard to just do normal business. Crypto dollars and eventually stable non-USD denominated crypto assets really can be used to run entire economies. And because transactions are peer-to-peer, they are much different from a regulation perspective than normal digital money. They are both not regulated For example, when I transfer some RSV to you, no company or person in the world is responsible for tracking that transaction or knowing our identities. So there's the privacy aspect as well, at least from the U.S. legal perspective. And B, harder to regulate. For example, governments that control bank rules in order to stop their citizens from buying foreign currencies will have a hard time controlling these peer-to-peer transactions. As always, the game, DeFi is, I believe, the new frontier for everything in modern finance. Crypto as money is still young. We have a lot to do. Do you remember Napster? Tether is kind of like Napster. It's taking off. People love it. It's a little sketchy, and it's probably not the design that will last. We don't want to make the equivalent of Kaza, another blip in the history that doesn't ultimately work out. The challenge is to build a platform that's as robust as BitTorrent and as great to use as Spotify and Netflix. Exactly. So they're going for mass adoption, guys. And if you guys want to look more into this particular token, look into their white paper, or look into what they're talking about. So when we look at, if we go to their current team, so there's some pretty interesting guys on here, like the co-founder and CEO, Naveen Freeman. And Naveen is an overseas strategist, legal and team coordination. Naveen oversees strategy, legal and team coordination at Reserve. Naveen is an entrepreneur who has co-founded 3 companies. His mission in life is to solve the coordination problems that are stopping humanity from achieving its potential. And he's particularly concerned about averting the long-term risks posed by development of artificial intelligence. Matt Elder is designing, analyzing, and overseeing the Reserve's stabilization protocol and architecting the Reserve Protocol implementation. Previously, he did engineering for Google, Quixi, and Linux Standard Basel, IBM. His graduate research at the University of Wisconsin-Madison was in program analysis. And, then we've got Charlie Smith, who's also contributed to the Economist magazine and helped start a Bitcoin mine in Texas. And he's developing tactics and partnerships to get our protocol into the hands of users. Exactly. Then, you guys can look into all of this, but these guys are legit. I mean, some, for example, and now if we look at the advisors, they've got Garrett Jones, and this guy Garrett served as economic policy advisor to Senator Orrin Hatch and as a staff economist to the Joint Economic Committee of the U.S. Congress. He's a professor of economics at George Mason University. And then we've got Paul Atkins, who was a commissioner of the SEC from 2002 until 2008. Pretty awesome, right? These guys are their advisors. In December 2016, Atkins joined a business forum assembled by President-elect Trump to provide strategic and policy advice on economic issues. Fascinating. Then we've got Santiago Siri. Santi is an Argentine entrepreneur and builder of online voting tools. Santi explained Bitcoin to the population of Argentina through a series of radio appearances. As you guys know, Argentina's money is completely useless at this point, last I checked. And lots of inflation issues there, lots of economic issues in Argentina. And I think things like Bitcoin and, Reserve, they're really going to solve a lot of these issues. So we asked several random people in Buenos Aires, and the majority had heard of Bitcoin from Santi. So, they've got the right man for the job. Ben Verschuure. I can't pronounce that name properly, but Ben is a former global macro portfolio manager specializing in fixed income and foreign exchange in developed economies. He managed funds at Clarion Capital and Fuel Macro from 2007 to 2017. Gary Basson. Gary co-founded and did simulation research for capital trading and was a trader for Balisni Asset Management. Wow, man, some of these names are interesting. So places these guys have previously worked in: Google, Effective Altruism, the Jane Goodall Institute, MIRI, Machine Intelligence Research Institute, OpenAI, Harvard Law School, NRDC, Tesla, IBM, Impossible. So they've got a pretty awesome team. And when we look at their current investors, all right, so as you can see, Sam Altman is the president of Y Combinator, co-founder and co-chairman at OpenAI, and a prominent angel investor. He has invested in Airbnb, Stripe, Reddit, Asana, Pinterest, Zanefits, Instacart, Optimizely, Change.org, among others. So already starting out very well. Then we've got Coinbase Ventures. Coinbase is a digital currency exchange headquartered in San Francisco and originally incubated by Y Combinator. So I guess it's linked with Sam Altman, I guess. Coinbase Ventures is an early stage venture fund focused on investing in blockchain-related companies. Then we've got Peter Thiel, who is a co-founder of PayPal, Palantir Technologies, and Founders Fund. He founded and funds the Thiel Foundation, which aims to further breakthrough technologies and improve humanity's long-term future. And then we've got Crypto Lotus is a cryptocurrency hedge fund based in San Francisco. These guys are behind them. Refactor Capital is an early-stage venture capital firm that invests in founders solving fundamental human problems. They have invested in dozens of biotechnology and public health startups. Simone Ducatch. Simone is a managing partner at One Way Ventures and the former managing director of Techstars. He is an angel investor in over 100 startups and led one of the MIT blackjack teams in the early 90s. Then we've got another PayPal affiliation right here. Jack Selby was a member of the founding team at PayPal, responsible for taking their operations international. He's managing director at Thiel Capital and managing partner at High Frequency Entertainment. Matt Breimer. Matt is a co-founder of General Assembly, which provides courses in mobile and web development, data science, and product management, and was acquired for $413 million in 2018. And James Glassock. James is the founder of Alfast Ventures. He's a former SVP of Business Development at Machinima and Warner Brothers, and a cryptocurrency investor since 2013. Lucy Wang. I believe she's invested in a few other things, if I'm not mistaken, but I've definitely heard her name before. She's an active investor in the machine learning, big data, and AI ecosystem. She's also an expert data scientist, having developed economic models and trade signals at Bridgewater. Eric was a VP of marketing at PayPal, Eric M. Jackson, and he's the author of the PayPal Wars. He's co-founder of Transinet, co-founder and CEO of CapLinked, and was founder and CEO of World Net Daily Books. And then we've got Jeff Morris Jr. Jeff is a director of product and revenue at Tinder. He was invested in companies including Lyft, Compound Finance, Blockfolio, Ocean Protocol, and CryptoKitties. Probably everybody in the crypto space remembers CryptoKitties. And so Distributed Global is an early fund in many respects. They were one of the first groups to enter crypto investing, one of the first ones to develop a stablecoin thesis, and they wrote the first check into Reserve. That's a great endorsement right there, guys. George, co-founder an early Bitcoin trading platform. He writes blog posts as long and detailed as hours on blockchain and distributed consensus topics. So macros, there are a bunch of people here, guys. You guys can look. I mean, I've already, giving you some really big names, massive. There's a lot of money behind this project. Fenbushi, they're everywhere pretty much, and this has, and now if we go to the protocol, right? So the background, the initial production version of the ReserveProtocol will operate in a centralized way, and over time, each protocol component will be migrated on-chain and released from control by founding team, eventually becoming fully decentralized. There are three planned phases of the Reserve network. The centralized phase, where Reserve is backed by a small number of collateral tokens, each of which is a tokenized US dollar. The decentralized phase, where Reserve is backed by changing basket of assets in a decentralized way, but still stabilized in price with respect to the US dollar. The independent phase, where Reserve is no longer pegged into the US dollar with the intent of stabilizing its real purchasing power regardless of fluctuations in the value of the dollar. So the tokens, So the reserve token, which is the RSV, a stable cryptocurrency that can be held and spent the way we use US dollar and other stable fiat money. The ReserveRights token, RSR, a cryptocurrency used to facilitate the stability of the reserve token. Collateral tokens, other assets that are held by the reserve smart contract in order to back the value of the reserve token. Similar to when the US government used to back the US dollar with gold, the gold standard, if you guys remember, obviously. The protocol is designed to hold collateral tokens worth at least 100% of the value of all reserve tokens. Many of the collateral tokens will be tokenized real-world assets such as tokenized bonds, property, and commodities. The portfolio will start off relatively simple and diversify over time as more asset classes are tokenized. How the reserve token is stabilized. If demand goes down for the reserve token, prices are expected to fall on secondary markets. What happens then? Suppose the redemption price of reserve is $1. If the price of reserve on the open market is 0.98, meaning 98 cents, our arbitrageurs will be incentivized to buy it up and redeem it with a reserve smart contract for $1 worth of collateral tokens. They'll continue buying on open markets until there is no more money to be made, which is when the market price matches the redemption price of $1. Pretty cool. The same mechanism works in reserve when demand goes up. If the price of reserve on the open market is $1.02, arbitrageurs will be incentivized to purchase newly minted reserve tokens for $1 worth of either collateral or reserve rights tokens, the latter only if there is an excess pool of reserve tokens available, and immediately sell them on the open market. They'll continue selling on open markets until there is no more money to be made, which is when the market prices matches the purchase price of $1. How the Reserve Protocol is capitalized. The Reserve Protocol holds the collateral tokens that back the reserve token. When new reserves are sold on the market, the assets used by market participants to purchase the new reserves are held as collateral. This process keeps the reserve collateralized at a 1-to-1 ratio, even as supply increases. Nice. At times, the Reserve Protocol may target a collateralization. Sometimes it happens, guys. Ratio greater than 1-to-1. When this is the case, scaling the supply of reserve tokens requires additional capital in order to maintain the target collateralization ratio. To accomplish this, the Reserve Protocol mints and sells ReserveRights tokens in exchange for additional collateral tokens. What happens when the collateral tokens depreciate? Collateral tokens are somewhat volatile. While we may be able to select a portfolio with minimal downside risk, the reality is that drops in the collateral tokens value in the collateral tokens value will happen. That drop exactly. When this happens, the Reserve Protocol will sell newly minted ReserveRights tokens for additional collateral tokens and add them to the backing. So the Reserve Protocol, stabilizing the peg. When the price of RSV goes above $1 on the exchanges, the protocol sells newly minted or excess wallet RSV for either tokenized assets or RSR, driving the price of RSV on exchanges back down to $1. All right, and now maintaining and then too, when the price of RSV falls below $1 on exchanges, the RSV protocol purchases RSV for tokenized assets, bringing the price of RSV on the exchange back up to $1. Maintaining the wallet ratio. When, as a result of the asset's appreciation or transaction fees, the wallet has accumulated excess RSR holders can purchase this with their RSR as part of stabilization. The price of RSV, which maintains the wallet's ratio of assets and reduces the supply of RSR. When the wallet's ratio of tokenized assets goes below the target range, the protocol sells RSR for tokenized assets, thereby replenishing the backing for RSV. I think it's a pretty fair system, guys. And you guys can check out this video in your own time. This was the Reserve Protocol explained at London Business School. Check out the white paper, guys. Always important before you invest. I actually hold a nice bag of RSR tokens, and the cool thing is, eventually, this with the staking and everything, it's going to be very lucrative. As always, everybody's going into staking. Everybody wants to make passive income. Why not, right? And basically, staking with, I believe, RSR, from what I remember correctly, helps the blockchain, the Reserve Protocol, to function properly, for the stablecoin to function properly, and so on and so forth. So there are a lot of advantages. And now if you go to CoinMarketCap, I'll tell you guys. I hate to do price predictions, honestly, but in my view, this coin has everything. RSR has everything, that can easily go to $1. I mean, not financial advice, guys. Do your own research, but I definitely believe that RSR is going to go places. Because of the way the protocol is designed. It's very unique. It's very interesting. It's already working. It's already being used in inflation-ridden countries. So here's what's interesting, guys. RSR, okay? Right now, it's almost a cent, and it went above a cent just some time back. Right now, because of the Bitcoin dominance and overall, Bitcoin is doing well. The market is looking good, healthy. So the altcoins are a little down, but they'll get back up, and this is a great time to accumulate these altcoins, guys. So this is why I'm doing these videos. And so if we go to the all-time low, I bought Reserve at this price, guys. Okay, and some of it at 0.002, and today it's this much. So yeah, I made quite a bit of money on this already. And this has a lot more to gain, in my view. It's been going up. It's a little down, but it's going to go back up. And especially when the bull market, now that the bull market, we can officially say, because, Bitcoin is doing so well. And if we look at today's Bitcoin price, 10,930, it's basically playing around the 11K, 10 more in the 11K range now. And it's definitely going to higher places. And things are looking great. We're officially in the bull market, I believe. And things like Reserve and stuff, if you guys have a nice bag of these, you guys are going to be making a lot of money. Not financial advice, just my personal opinion. Do your own research. So I hope this review of the project was helpful for you guys. As you can see, stable coins are the future. We need stable coins in order for crypto adoption. And the other coins which are not stable coins that are functioning, that are working to maintain the blockchain, they're the ones which their prices can fluctuate, and they help the stable coins remain stable coins. And these coins, the ones that are not stable, can make massive strides in their prices as well. So this is the DeFi enthusiast here. I hope you guys enjoyed this video. If you guys did, please like and subscribe, share it with your friends, comment below, all of that stuff. And all right, guys, this is me signing off. Take care. Have a good one. Bye.